Red states are winning the post-pandemic economic recovery, or so suggests a recent Wall Street Journal story. Driving that trend, workers moving from the coast to Republican-leaning states in the middle of the country. What's behind this shift? Adam Kamins is the Moody's Analytics Senior Director. Adam, nice to see you on a Friday. It almost seems silly to ask in what appears to be a very political piece, but does this have much to do with politics, or is it simply about pandemic shifts?
It actually has less to do with politics than you might think. So the biggest reason why people are moving to red states has to do with the fact that red states generally are cheaper. There's more plentiful land. Housing costs are a lot lower, so they can get a bigger house. They also can get a better quality of life, and that might mean warmer weather. It might mean parts of the Mountain West, just better scenery than you might get on parts of the East Coast. That is the single biggest set of factors, more than any one policy actually that's driving it.
And in terms of the demographics of who's moving to these different states, whether they're red or blue, what are you seeing in terms of younger workers? Because they seem to be gravitating back to the cities and some of these blue states.
That's right. So when we look at the data and take a more detailed look by age group, most age groups since the pandemic have moved to these redder states, middle of the country, the Sun Belt, in greater numbers than they did beforehand. I think a lot of that has to do with the advent of increased remote work and the flexibility to be farther away from cities. But among the youngest workers out there, especially 18 to 34-year-olds, and in particular 18 to 24-year-olds, we actually are seeing a pretty significant movement back into big gateway cities. So New York, San Francisco, DC, Boston, we're seeing that young cohort move back in. I think part of that has to do with it being a lifestyle choice, right? That living in a city is not being undertaken so much out of need now to be close to your office and to be where the jobs are, but to be somewhere that's desirable because of the amenities, because of shows, social life, that kind of thing.
Unfortunately, for cities like this one, New York City, that's very bad for their tax bracket. Income, the young workers that don't make as much money out have gone all the wealthy older workers to lower tax states. But the article leaned on Moody's data, in particular, return to pre-pandemic economic norms, and it states 8 of the bottom 10 were blue states in that metric. What's behind that trend?
That's right. I think there's a few reasons for that. One just has to do with the fact that early on in the pandemic, blue states were the hardest hit. They also closed down more severely. So you have places like New York, New Jersey that are near the bottom, California as well. It's been a slog to get out of that. But I think the single biggest reason is that blue states, almost by definition, are more urban. They are states with at least one big city generally, or if not a big city themselves, they're maybe adjacent to a big city, like a place like New Jersey or Connecticut, that sort of thing. And what we're seeing in those places is that people left in pretty large numbers during the pandemic. And as you suggest, the people that have come back are not the high earners that are going to carry the high end of the real estate market and drive condo sales, things like that. What you're getting is younger workers who aren't making as much, maybe driving up demand for apartments, but more for affordable real estate, as opposed to some of the high-end transactions and the not paying the same level of taxes as you would get among some of the higher wage workers, for sure.
In terms of where people are choosing to move, obviously, you have, say, if you're a company like a Disney in Florida and you see states sort of weighing in politically and perhaps maybe that affecting the way whether or not you move there. You also have, of course, the Supreme Court with its ruling reversing Roe versus Wade. How are some of these social changes affecting where people may choose to live?
So at the moment, we're not really seeing any big shift in how people are making decisions. I think, with the Disney situation is a good example of a company that is pretty firmly entrenched in one location. So I don't think I would bet on Disney leaving Orlando anytime soon or really meaningfully reducing its Florida headcount. With other big changes like Roe v. Wade, I think there is some potential risk there to some of these fast-growing states. And obviously, there are a lot of considerations at play. And without wading too much into the politics of it, I think the biggest potential short-term changes that we could see would be around states that put restrictive laws into place, what it could mean for young female workers, right? I've heard this sentiment sort of anecdotally expressed a few times that people would think twice about moving to states that that are putting these strict laws into place around abortion. And if that's the case, then potentially you could have maybe a little bit of a lessening of the edge that those places have had. I think the other thing to keep an eye on is the healthcare sector. And I think in particular, places like Colorado, Illinois, Minnesota, where there are going to be no real changes to abortion laws, but surrounding states are making significant changes. You could see a potential shift in terms of what the healthcare industry looks like in those places.
That will be fascinating to watch. One thing we do know, though, we have seen a lot of companies move from blue states to red. Tesla setting shop up in Texas, hedge fund Citadel moving from Chicago to Miami, Caterpillar from Illinois to Texas. How much of that is driven ultimately by tax rates?
A lot of it is, right? I mean, when a company is moving from a high tax state to a low tax state, of course, I mean, there is an appeal there to paying less in taxes. I think, though, a necessary condition for them to make that move is to have the workforce that they need. And I think what's happened now in the last few years, which accelerates a trend that was already happening before the pandemic, but as more of the workers that they need are moving into states like Texas and Florida, suddenly there's not as much of a trade-off for them, right? So you can pay the lower taxes and have access to a workforce in Texas or in Florida that is arguably every bit as good as the workforce in a state like New York or California. And so you kind of put those two pieces together, and I think that's a big reason why you're seeing more of these moves.
All right, thank you for breaking that data down. Adam Kamins there, Moody's Analytics Senior Director. Thanks so much.